Alphabet, the parent company of Google, just reported earnings and the results were fantastic. However, the market was not really blown away and it sold off a little bit after hours. The stock that actually shot up after Google reported earnings was Broadcom. It went up 6%, and that reason had to do entirely with Google. In their latest earnings, Google announced that in 2026, they are planning CAPEX investments anticipated in the range of $175 to $185 billion. You heard me right. They may be spending $185 billion in a year. And Google was a company that just back in fiscal 2023 only had $32 billion of capital expenditures. This dramatic ramp up has to do with the investments in AI infrastructure, the huge data center build out and all of the chips and servers that go in it. So the market saw this as good news for hardware suppliers like Broadcom, who assist with the Google TPUs, but they were not really that excited about it from the perspective of Alphabet stock. The market is seeing this CAPEX spending as a negative for Google, but I'm not so sure. I think Google is still an attractive company to hold for the decade to come. And I'm saying that after the stock has gone up 70% over the past 6 months, and as it trades at one of the highest forward-looking P ratios ever for Google. It is definitely not the screaming buy it was in April 2025 during that tariff sell-off and the months before and after when it was trading at a 16 P ratio. I was making tons of content about it then. I was buying a ton of Google stock and a lot of our audience was as well. It's not dirt cheap like it was then. But as we sit here today in 2026, Google is still a great business to hold for the long term, and arguably, it's still fair value. So in today's video, I'm going to do a full updated stock analysis on Alphabet, go over their latest Q4 2025 earnings report that just came out, and explain why I think that $185 billion in CAPEX is not something to be scared about and actually will help cement Google as an AI leader and have great returns for the decades to come. With that said, let's roll the intro.
The following reflects the opinions of a man who spends far too much time thinking about stocks. Please do your own research before making any investment decisions. Nothing in this video is personal financial advice. Continue at your own risk.
My name is Zach. This is Dividend Data. You should leave a like and subscribe to the channel if you enjoy the video. Throughout, I will be using dividenddata.com, which is my stock research platform I've developed over the past few years. It is designed to help you fully understand the actual business behind a stock with great data visualizations and tables displaying all of the key metrics you need to analyze, plus an AI analyst where you can ask questions and get even more visualizations, and a portfolio tracker where you can automatically import your portfolios. We just released a new feature for dividenddata.com, which is Dividend Data for spreadsheets. This allows you to access all of our financial data directly in your spreadsheet so that you don't have to copy and paste from various sites and have your data get outdated as you start to build a tracker model. I will be using this throughout the video. And if you want early access to this tool, the Google Sheets is available right now for members. And we're doing a special early access sale where you can lock in 50% off annual membership. And that's so you can be one of the first people to try this Dividend Data for spreadsheets tool. It is available for Google Sheets and we're just launching the Microsoft Excel version. And because of that, we're ending the early access sale this week. So if you want to lock in this best price we're ever going to offer for dividenddata.com, then click the link in the description and pin comment of the video. There you can lock in 50% off our annual plan every single year. There's a 30-day money-back guarantee, so no risk in trying it out. And if you're interested, right now is the time you have to join, because after this, the sale is going to be gone, and actually the base price in order to get what this tier will be, that is going to be higher. So you're getting a discount on top of a discount. Click link below, sign up so you can follow along with me throughout this video as I research Google stock. All right, so let's dive into Alphabet. Ticker symbol GOOGL if you want the Class A share, or GOOG if you want the Class C share. Alphabet is the second most valuable company in the world with a market cap just over $4 trillion, and deservingly so. As you can see here, the stock is still trading around all-time highs, although it has sold off 2% over the past 5 days. The company has had a long track record of earnings per share growth. They just beat expectations in the quarter with $2.82, which is over 31% year-over-year growth. So let's dive into the latest earnings report. So I just opened up a new spreadsheet. We're using dividend data in Google Sheets. I've actually been developing the Microsoft Excel version, and I've grown to like it a little better. But since this is a Google video, I'll use the Sheets version. So we can go over here and we'll type in Google. We have a search feature here, and we have these quick actions where you can dump all of the history of a stock. So for here, we're going to click KPIs, and we're going to do quarterly. We're going to overwrite the cells, and boom. Let's zoom in here so that we can see better, and we're going to dive into this latest quarter that just came out. And this is data as of December 30th, 2025. That's when their quarter ended. So let's start with Google Search and other revenue. Now, if we remember what the conversation with Google Search was a year ago, people thought this business was going to die. They were saying AI was going to destroy Google Search. It's the end of it. They thought Google was behind on AI. That's why it was trading at such a low multiple. Fast forward a year, and people have realized that was all ridiculous. And this goes to show how quickly things can cycle in the market. The reality is that Google Search has become an even better product because of AI, and they are monetizing it even better because of AI. So year over year, Google Search revenue has grown from $54 billion to $63 billion. This is for Q4. That's 17% growth year over year. And there's two factors here. Usage has actually grown. The number of queries have grown on Google. And that's because there's new things you can do on Google. You have AI overviews, which give you a much broader way of getting an answer. And this year they just added AI mode into Google directly, not even talking about Google Gemini. And you can get a simple version of AI chat natively in Google. So Google's just become a better product. It has now literally turned into you can get the answer for anything. The other major thing here is that advertising is actually one of the best return on investment things for AI right now. And they kind of already knew this with machine learning and deep learning, and they have just supercharged that. Google mentioned that in their earnings call that they're seeing significantly higher ad targeting and ad matching with Google Search, and that's leading to better performance, so people are willing to pay more for it. This is the same thing that Meta is saying with AI advertising. So Google Search is still very strong. And if we look at a breakdown of Google's overall business, search is more than 55% of their total revenue, and it's actually the most profitable part of their business by far. And all you have to do is think from first principles of how high margin each individual click is on Google for these ads. The cost per query is like nothing. So this thing is a high margin money printer, and it's the foundation through which Google has built their entire business and ability to expand into all of these other categories. They really haven't had to worry about short-term profitability in most of their businesses because Google Search is the cash cow. However, Google is starting to build some incredibly significant parts of their business now, and these are becoming pillars. We have Google Cloud revenue, which is now 15.5% of their overall revenue. We have Google subscriptions, which is now 11.9%. That includes their Gemini subscriptions. That includes their YouTube Premium subscriptions. That includes Google Workplace subscriptions. It includes YouTube TV subscriptions, although that's not as profitable, but good revenue. And then, in my opinion, their most underrated business, which of course I'm biased, I'm on YouTube, but YouTube ad revenue here, that's 10% of their overall revenue. In my opinion, if YouTube traded alone as a company, that would be $1 trillion business. I think it deserves to trade at a higher multiple than something like Netflix. So I'm going to dive into each of these segments, and there's just some big news around Google Cloud. Like, I'm talking very impressive news. Google Cloud revenue for the quarter just hit an all-time high of $17.6 billion. That is 48% growth year over year. And in my opinion, I think this is one of the most under-talked about parts of the market right now, is how fast these large cloud companies are growing. You had Microsoft Azure growing just under 40% year over year at a much larger clip. It's a much larger business than Google Cloud is, because Google Cloud is third place right now. But Google Cloud is quickly becoming the second pillar of Google. It's fast growing. It's becoming profitable now. And this is going to keep marching upward for a decade. So it went from $11.9 billion to $17.6 billion. And you can see that if we just go back to what this business was at the end of fiscal 2019, the growth has been fantastic. It was $2.6 billion of quarterly revenue, and we're now at $17.6 billion a quarter. And these businesses are not slowing down. The bigger story I see here is actually with the operating income. So the profitability of Google Cloud, that went from $2 billion last year in Q4 to $5.3 billion in the latest quarter. So that means it's growing more than 100%. It's doubling year over year. It grew 153%. I mean, this growth is fantastic. And it's really making me wish that Microsoft disclosed more of specifically the Azure business, because they don't give every single quarter the operating income number for that business. They only disclose the growth rate every quarter. So as we look at a combo chart of the quarterly revenue and operating income for Google Cloud, it becomes clear that this is becoming a high growth, high profitability business for them. And who knows, 10 years from now, it might be as profitable every quarter as Google Search is today. But as of right now, Google Cloud is still a small part of the profitability, only at 11.7% of their quarterly operating income. Google Services, which includes all of their subscriptions and their advertising business, that's 88% of their operating income. And that's becoming more diversified over time away from just Google search ads, but the overwhelming majority of that is still Google search ads. All right, so before I get into covering the biggest risk around Google right now, and also maybe the biggest opportunity, which is that $180 billion CAPEX number, I will dive into that and my thoughts. But first, let's just finish up some of the top line stuff from the earnings report. It's hard to believe with how fast things move in AI, but Gemini 3, it just came out last quarter. It's a fantastic model. And we're going to go through this cycle of companies releasing, this one now has the best, this one now has the best, and we keep repeating. But Google is one of the players that will always have one of the top models. And that's pretty clear, and the market's even starting to realize that. They did not realize that at the beginning of 2025. And now there's some new business opportunities over at Google. First off, they have a AI API business so that you can query their models. And the Gemini app, which is basically their ChatGPT competitor, that has now grown to 750 million monthly active users. Now, I will throw a little bullshit on that number because they do cheat a little bit because they include the integration of it into Google Sheets, Google Docs, Gmail, all these other products. They count that as Gemini app. But I'm going to be honest, I think Google and Gemini, it's going to completely capture the consumer side of AI. And basically the only competitors that are going to be there, I think they'll probably end up being the winner in terms of monetization and total usage, especially when it gets entirely thrown into Google, because that has all the distribution advantages and all the product ecosystem. But with that said, I would not count ChatGPT or Grok even out of capturing a large part of that consumer market. And there's tons of competition in the enterprise with Anthropic. You got Microsoft, and you have Google and OpenAI. It's a war right now. And ultimately, I don't think a lot of the value is going to be at the model layer. It's going to be in the infrastructure and then the applications. Ultimately, what you can do with AI, that's going to be the value. And that kind of pivots us perfectly into talking about this CAPEX investment. But I do have to mention something above here that Google just passed 325 million paid subscriptions across all of their services. This is very good for the company as to become less dependent purely on advertising. And I would love for them to break out the profitability of these subscription services over time. But let's go back to AI and the CAPEX investment, since that's like the big thing here. So they are anticipating for fiscal 2026 for CAPEX investments to be in the range of $175 to $185 billion. And I'll give you some context of where Google is coming from. So I'm back here in dividend data for spreadsheets, and we're going to dump in the cash flow statement. I already did it here. And we're starting with annual. So we can see here we're looking at fiscal 2025. We scroll down. They spent $91 billion in capital expenditures for the full year fiscal 2025. So they are basically doubling CAPEX from an already extremely high number. It should be noted that they are outspending some of the biggest spenders in this space. They're outspending Microsoft. And if we look at the year prior, Google just spent a little over $50 billion in annual CAPEX. And the year before that was $32.5 billion. So I'm going to fully dive into that number. I'll explain what is the risk around it and why I think it's kind of a no-brainer for Google to be investing as heavily as they can right now. All right, so I created a chart here to help explain a very important thing about the risk of this CAPEX investment. I have the operating cash flow, the free cash flow, and the CAPEX for Alphabet stock. And we're at a very big inflection point. In fiscal 2025, that was the first year really ever in the history of Google where the capital expenditures significantly outpaced the free cash flow generated by the business. Free cash flow is $73 billion for the year. CAPEX was $91 billion. And how you calculate free cash flow, it's basically all of the cash generated from the business, the operating cash flow, minus the capital expenditures. And this is what would be available to shareholders that you could redistribute either as dividends, give some returns via share repurchases. You can use to pay off debt. You can use just to build up your balance sheet, have more cash. And I'll first just say it's incredible that Google can spend $90 billion a year in CAPEX and still have over $70 billion of free cash flow. But this guidance is crazy because in fiscal 2025, Google had $164.7 billion of operating cash flow. So in 2026, they are planning to spend more then they generated an operating cash flow in 2025. And this is where we start to get into more risky territory. Now, of course, I do think Google will grow in fiscal 2026. They grew operating cash flow by nearly $40 billion from 2024 to 2025. But based on this guidance, in 2026, we're going to be close to a zero free cash flow Google. And that is something that has never happened since they went public. And that's because the core economics of Google are so strong and so profitable. Now, I don't think they actually will go negative in 2026, but it's going to be close. Free cash flow is going to get cut significantly. So with that risk put out there, I'm now going to explain why it makes sense to do this. I'll start with taking a look at Google's balance sheet. This company has been a money printer for a long time, and they did not waste it all away. They did not pay out huge dividends. For a long time, they didn't pay any dividend. They just started paying a dividend over the past 2 years. They didn't do tons of share repurchases. They have been building up a fortress balance sheet. They now have over $415 billion in shareholder equity. Their assets far exceed their liabilities. They have $126 billion of cash and short-term cash equivalents. And if we go back historically, the criticism with Google is that they weren't innovative. They didn't have anything to invest in. They didn't know what to do with the money. And now the answer has been found. Google is getting aggressive. They are investing. They want to win AI. They want to be one of the top players, and they're going to. They know they have a money printer business. At any point, they can lower the CAPEX and take in $25 billion a quarter in free cash flow. They can do that at any point. But the reality on the ground is that there are only a few companies in the world that can even invest this kind of money to build out this data center infrastructure. It's Alphabet, it's Microsoft, it's Amazon. And we have the newer entrant, the Elon complex of SpaceX, Tesla, and XAI. But they're taking a whole different route. They're going to have these space data centers. That's a whole video itself. It's kind of crazy. He's trying to build millions of AI data centers throughout space. But let's just focus on Google. Why are they investing so heavily? On the latest earnings call, they mentioned that they were able to drop the cost of serving Gemini 78% in 2025. That's while the models became far more intelligent, far faster, and far more capable with tool use, computer use, agentic use, and that is going to continue. And if you spend a lot of time in the AI discussion, there's a thing that's being brought up a lot, which is Jevons paradox. And basically it's the idea that as a thing becomes more efficient, affordable, and useful, then the actual usage of that resource tends to increase rather than decrease. And if you think about it, that makes sense that that would apply to AI. The more useful and the cheaper it becomes, the more it will be used. So AI usage is going to explode. And as we're looking at Google, Microsoft, and all these big tech leaders, they're talking about AI diffusion. They want to bring AI everywhere and to everyone. And it's going to be an explosion of digital intelligence over the next decade. So Google is investing to serve that demand. And it's going to be exponential. It's not going to be linear. So when you look at Google and their spending in CAPEX, in one sense, you could paint the picture that they're in a sort of prisoner's dilemma where they have to spend the money or they risk losing their market position. But you can also spin it completely in the other direction where it's a huge opportunity for Google. I personally, I'm extremely bullish on artificial intelligence over the multi-decade view. I think it's going to completely transform society. I think productivity is going to grow 10, 100, 1,000x over hundreds of years, assuming we don't have some nuclear bomb or something that destroys us. And Google is positioning itself as one of the obvious winners. But I think there will be a lot of winners. I think the Google search franchise, that's going to become more AI integrated, and they're going to be one of the top, if not the top, consumer AI applications. And that's going to be monetized through ads. So it will be free, which will be a great service for everyone. They can have free intelligence, but it will be ad supported. This is the same path that ChatGPT is going for that free consumer tier. And I think it's going to print money for both of them. I think people are way too negative on ChatGPT as well right now. That free ad supported business over the next 5 years, I think is going to become incredibly profitable. But Google, they have tons of advantages. Not only do they have one of the best AI research teams, they've been in this for more than a decade. That's why it was crazy when back last year, people were so negative on their AI strategy. But the things that mattered pre-AI, they still matter. They have a deep product ecosystem that all integrate together. Lots of user data, high utilization products, tons of distribution. So of course they're well positioned in AI. And when you consider that one of their core businesses, advertising, that is a clear return on investment for AI spend. It's kind of a no-brainer that Google's spending this much money. And I think long term, when we talk 5 to 10 years, it's going to be the right move. So as we sit today with Google stock trading near its all-time high in valuation and a historically high multiple based on forward P ratio, I'm not necessarily worried about Google. I don't think it's a screaming buy. I think it's trading around fair value, and there's definitely tons of companies I would rather not own than Google right now. And I think if you bought it at today's price and you held it for a decade plus, you'll probably get pretty good, reliable returns. But all of that's just my opinion. You should do your own research before making any investing decisions. And that's why I created this great research tool to help me do my analysis and all of our users. So if you want to use dividenddata.com and our spreadsheet add-ins that I showed throughout the video, click the link in the description and pin comment. It's all available at dividenddata.com. And the best time to join is right now because we have a 50% off annual membership sale to get early access to our spreadsheet tools. And that's going to end this week. So if you're watching this video, jump on it because it's going away. And not only is the sale going to be gone, it's never going to be offered at this price again. And once the spreadsheet tools are out for the public, the base price to get everything included, that's going to go up too. So you're getting a discount on top of a discount. So click the link below and I'll see you in the next video.